This is the legal panel, but this is one of the more confusing topics of all time, at least in the last quarter. We're going to have the blockchain cryptocurrency panel begin, and I'd like to introduce someone who's near and dear to my heart. And everybody on this panel is a good friend of mine, too, by the way, just so you know. Margaret Rosenfeld from Smith Anderson. It's a firm that does New York work at North Carolina prices. So come on in, Margaret.
And by that he means we will take pigs in pay of North Carolina. We are the headquarters of pork in the world, if you didn't know. Well, thank you, everyone. We're going to be talking a little bit about this new disruptive way of financing using blockchain technology. And I'm going to ask each of the panelists to introduce themselves. We've got 3 lawyers here who are going to take away some of your worries, I hope, about things you've been hearing in the news. So I'm going to start at the end with Lou, if you could introduce yourself.
Sure. Hi, everybody. My name is Lou Bevilacqua. My law firm is Bevilacqua, PLLC. We're a corporate and securities law boutique. One of our focus areas is on Jobs Act financing transactions under Regulation A, Rule 506C, and Regulation CF. And more recently, we've been advising clients on how to do SEC-compliant token offerings. And I look forward to speaking with everybody about that.
Okay, and we're going to go with Richard next.
Hi, I'm Richard Friedman. I'm a partner in the capital markets and corporate department at Sheppard, Mullin, Richter, and Hampton. We're an AmLaw 100 law firm based in California. We have 7 offices in California up and down the coast. I work in the New York offices, and we also have offices in Chicago, D.C., and then internationally in China and Korea. I'm a corporate and securities lawyer by training, been a securities lawyer for about 30 years. The last couple of years, we had a partner or 2. We have a blockchain team at the firm, and we had a partner who was particularly interested in this ICO market and who was calling me for the past year almost daily about different ICOs and securities issues. So I got sucked into it, and since he left and joined a smaller firm now, I'm left behind with some other partners, having formed a team and dedicated to learning and understanding as much as we can about this ICO market. And so happy to talk to you about that and securities-related issues today.
All right, and Lynne?
I'm Lynne Bolduc. I'm a partner at the law firm of Fitzgerald-Yap Creditor in Irvine, California. I am the chairperson of the firm's corporate and securities department. Over the last 22 years, I have structured and implemented over $1 billion in financing transactions for domestic and international clients, primarily private placements, public offerings, and mergers and acquisitions. We represent private and public companies, as well as investment bankers, venture capital firms, and funds.
Thank you, Lynne. And as Shelley said, I lead the blockchain technology practice at Smith Anderson. We're located in Research Triangle Park. That is the triangle that is formed by Duke, UNC, and NC State. And Forbes magazine listed our area number 8 in the world for blockchain developers, so you can see why we have a practice here. But my background is over 20 years of securities and corporate law. Have practiced in London, Tokyo, and Frankfurt, and have been in Research Triangle Park for 17 years, working with technology, life sciences, and manufacturing companies, high-tech manufacturing companies. So, who here, everyone, I'm guessing, has heard of Bitcoin? Raise your hand if you, we're going to put all hands up who's heard of Bitcoin. Come on, everybody, if there's a Bitcoin. Everybody knows Bitcoin, right? Okay, raise your hand if you own Bitcoin. Good. Who has heard of blockchain technology? Right? All right. Who could stand up and define what blockchain technology is? I think there's 2 or 3. All right. In the room. And so we're going to start off with trying to define a little bit about what blockchain technology is, because that is the technology, when you hear of Bitcoin, that is underlying Bitcoin, ETH, Litecoin, all of these cryptocurrencies. And it's also the technology that if you're a company and you're interested in doing something called an initial coin offering or ICO, or token generation event, or TGE. That's the technology that you need to be familiar with and make sure that there's a reason for your company to be involved with that. So we're going to go read the definition that I got off of a Wikipedia-type source this morning because it'll make your eyes glaze over. Blockchain technology is software that stores data across a network of personal computers that makes it decentralized and distributed, so no central company or person owns the network or system. Yet everyone can use it and help run the block. Okay, so when I read that, I was like, okay, distributed, decentralized, all of that. So we're going to do a little role play where we give you an example of a transaction on the blockchain. So Lynne has volunteered to help me with this. If you can come down to the front. So Lynne is an attorney, and Brian is a company in Italy that wants to hire Lynne for her services. So Lynne, what's the first thing you do as a lawyer when an unknown company wants to hire you?
Get a retainer.
How many Bitcoin do you require for your retainer?
My retainer is 4 Bitcoin.
All right, so this is actually the Smith Anderson coin, but we're using it as a representation of Bitcoin. So she has 4 Bitcoin. But Bitcoin doesn't exist, blockchain doesn't exist. In the middle we have,
A banker.
okay, so a traditional bank in the middle. So Brian, you want to pay the traditional banker. You're going to send a wire over to Lynne. Lynne, do you need some information before he sends that wire?
First, we need to send out our wire instructions, but there's 2 sets of wire instructions, those for domestic and those for international. Got to make sure my secretary sends the international ones or never going to happen. Second, my Italian client is a company. That's an entity, not a person. My bank needs to comply with FinCEN requirements, meaning I need to know, the bank needs to know, the beneficial ownership identity of everyone who owns 25% or more of my Italian client's company, plus certain officers. Second, my bank has to comply with AML, anti-money laundering requirements, so they need additional information from my Italian client, not just driver's license. They'll need a passport, they might need utility bills, the list goes on and on.
Okay, hand him all this information. Okay. And bank, what are you doing with this information?
I'm giving it to my client?
No, you're checking it.
Okay.
Okay, so he's checking the information and making sure that the person is not on any known terrorist list, for example. He's not a drug runner, I'm pretty sure, as far as we know. So, and then that information stays at the bank. It's within that bank. All that personal information within that bank. How do we feel about personal information being stored in a centralized place? Okay, so now we send the wire. So send the wire, information goes to him. Well, it doesn't just go to him. No, because this is a bank in the United States. There are about 2 or 3 corresponding banks that this goes through first, goes to him, and we take a little piece out of it every step of the way.
I sure hope I give it to the client.
And, well, now Lynne comes in and she has to show you some information to get that, doesn't she?
Yes, you have to prove to me who you are.
Exactly. And it is not necessarily my law firm's bank that gets the money first. My law firm's bank has to route through an international correspondent bank. So now the information goes to, say, a Wells Fargo, goes through all of their systems, and then the wire ultimately, hopefully, will come to my bank.
So, Allison represents a hacker. Go attack the bank. And so now all that information is there, and Allison is going to spread it throughout the audience. Go ahead, Allison. Okay. Yes. So she is the hacker who's spreading it throughout the audience. So his utility bill, his personal information, his bank routing numbers, all of that is there. All right. Shelley, you may sit down. No, we don't need you. All right. So when you hear the words decentralized, we've taken out the centralized part of it. The bank is not there anymore. So now, hold up your Bitcoin. We have this Bitcoin. It's going to go, and they both have private keys. So hold up your left hands. They have their private key here. Nobody else knows that. It is your own key. You don't share it with anyone. You memorize it. You have it in a safe deposit box. Maybe your son knows it, too. So that they have their private key. And then, on the other hand, they have their public key. Raise your other hand. Public key. Actually, this is your public key. Your key. So his private key, I'm just really simplifying this, says, hey, send her 4 Bitcoin. Her private key says, receive 4 Bitcoin from him. Their public keys talk. There's a transaction, and a block is made, a data. That is the block. I'm really simplifying this, and I really suggest you go online. You can read, you can see lots of YouTube videos that explain this really well. But the block is now formed, and it's there. It's immutable. And now we have, I need a miner. Do I have a miner in the audience? There's a miner standing in the back. So how do we know, how do we verify? And he's going to come up, and he's going to verify, because go ahead. He's going to go verify that this transaction was valid. And not just this one miner, but all of this is on, it's a peer-to-peer network. So that's why it's decentralized and distributed. And these miners go and do something called proof of work, and they check and make sure that this is a valid transaction. And then it gets put into the blockchain. It's immutable. It stays there. And it's chronological. So that is an example of blockchain. So this was just a simple barter transaction that we tried to show here. We're going to go up and talk to you now about the things that companies are doing and the regulatory areas you need to be aware of here. Richard, I'm going to start out with you because we just described this. So, okay, you have companies come into your office and they're saying to you, I'm hearing about these token offerings. So you have some companies like that. Is that a good idea for my company to do? And then you have other companies that are coming in and they've been in blockchain for a while and they say, yes, I want to do this ICO. So what are the issues that you kind of run through with the client when they approach you?
Thanks, that's a good question. When they come in, I'm first trying to figure out why it is they think that the token's a good idea for them, how that token is useful, and why their business needs to use blockchain, why that's a good reason and good use for them to even use a token in the first place. So tokens can be a lot of different things. I'm always trying to figure out what it is when they say they want to use a token, and I pretty much think most of them are coming in because they heard that it's a good idea to raise money and say you have a token, and they think it's easy. And so I liken it back to, sorry if people in the room are offended, but when we did deals in China, there were other countries thought that it was easy for them to do deals internationally because it was easy for one country to do it, another could just come in. So when you get to tokens, people come in now and say, I want to do a token offering. What does that mean? What does your token do? How does it work? And why is it a useful case for you to do it? Is what I think the first questions I'd ask are.
Yeah. I think that's really good. Why blockchain technology? If you're going to go out and do a financing, there's a little bit of the ride the wave going on right now. So companies are always looking for ways to finance. But the companies that are actually being successful have a reason, a case use for blockchain technology that is important to their business operations in some way. Lou.
Yes.
Okay, so we've heard a lot about SEC regulation in this area, and the chair of the SEC coming up and says, this is everything's a security, and then there's no such thing as this utility token. So what is a security token, and what do you think a utility token is?
Sure. So I grew up in New York City, and I used to take the subway, and the New York City subway, they used to have these little round tokens. And you'd buy a token for about $1, you'd stick it in the turnstile, and you'd be able to go from point A to point B on the subway, right? People weren't investing in the tokens. People weren't saying, oh, I'm going to buy all these tokens and sell them to my friends and make a lot of money. You bought it, you used it, and that was it. So that's clearly a situation where it's a utility, right? There's an unlimited amount of them. You can use them right away to get from point A to point B on a network. Now, there are other situations where companies are in the process of building a new network, right? Maybe they're going to build some kind of healthcare network, and they're going to have doctors on it, and they're going to have patients on it, and they're going to share information. And in order to get on the network, you're going to have to use a token and the blockchain technology. Now, that is a little bit of a different situation because the network hasn't been built yet, and people are thinking that, you know, if they buy these tokens now, they may be worth a whole lot of money later. And there's an anticipation that these tokens are going to trade on some kind of exchange. And so people are really buying for investment. They're thinking they're going to make money out of it. There's not necessarily an unlimited amount of the tokens. That's another, factor you'd want to look at. And so the SEC, there's this Howey test, and that's what the SEC uses to figure out whether something is a security or not a security. And one of the main factors, it's a multi-factor test, but one of the main factors is there some anticipation of a profit? And if there is, then it's likely to be a security, and in that case, you have to treat it as a security. So as long as you do that, you should be fine. You have to find an exemption or you have to register it.
Mm-hmm. So, Lynne, you talked a little bit about AML earlier, anti-money laundering in the skit. Within blockchain, there's a lot of concern about people are not complying with AML in bringing money into their company. So they're not checking out the people who are coming to them. Can you describe sort of the process that you understand for AML and what people should be doing in that area?
I work with a lot of private placements and public offerings, so we have to act as escrow agent often, and we have to develop subscription agreements. Mm-hmm. When the funds come from an investor, first step is the broker-dealer firm. They have to do their own AML compliance and run a whole lot of tests on to find out the background. Remember, this is after the bank, as we showed in the role play, has done all of their work. So the broker-dealers have to do their own as well. And then we have to make sure when we receive the subscription agreements that we at the law firm, the second step for compliance, have all of those documents that I referred to at the beginning, the utility bills, the passport. It's tremendously cumbersome. But it does tend to eke out who is behind the investment, and particularly with the new FinCEN rules, which are now, they're only required for financial institutions. However, I have a lot of companies, like registered but non-traded REITs. They're implementing the FinCEN requirements voluntarily. None of that is happening with the cryptocurrency industry, and that's a big criticism of it.
Mm-hmm. Agree. And a lot of the companies that are doing pre-sales or ICOs are voluntarily now doing KYC AML compliance, and that's our recommendation as well. And one reason is because eventually, if you're accepting Bitcoin for your XYZ company token, you've accepted Bitcoin, but you now have to pay a bunch of your accountants, attorneys, other people in fiat, US dollar. So you have to now trade that Bitcoin you received and get fiat from it. And where do you put that fiat and how do you pay them? You put it in a traditional bank. And so if your traditional bank will say to you, where's your KYC AML? Even though I would argue, as an operating company, you probably are not required to do it under the FinCEN rules, and that's a technical debate. Banks are requiring you to have done it. So a lot of banks have frozen accounts of companies that have raised millions of dollars, and so you're stuck with only Bitcoin, and now you're trying to lease an office or hire some employees, and your employees may not want to be paid solely in Bitcoin. So making sure on the front end that you're doing all the right compliance steps is really important. And there are a lot of good vendors out there where you can just outsource this to them to do. let's just talk a little bit about pre-sales and what we mean by pre-sales. So this concept is out there of before this token is ready, before the platform is ready, you can buy a pre-sale right to that future token. It hasn't been, the code hasn't been written yet, the smart contract hasn't been written and audited, it's not interacting with the platform yet. So you're basically investing in a startup company that's developing its technology, and that's called a pre-sale right to a future token. Some of you may have heard of something called a simple agreement for future equity that is really common out there. And so a simple agreement for future token is out there. What kind of structures, Lou, are you seeing for investors out there who want to get involved in sort of early rounds of pre-sales?
Yeah, sure. Well, once you make the determination that it's a security, you pretty much have to sell it like a security. So the main exemptions people are using are Regulation CF, which is regulation crowdfunding. Just very quickly, you can raise up to $1,070,000 from both accredited and non-accredited investors. And basically, you file a Form C offering statement with the SEC. There's no regulatory review, no delay. As soon as you file it, you can post your offering on a portal. It has to be a funding portal member of FINRA, so there are about 30 of them. And you could, you post your video, you post your company summary, and you could advertise, generally solicit, and drive traffic to the portal. And investors, they could pay with ACH, they could sign documents electronically, et cetera. So both accredited and non-accredited investors capped at $1 million. $1,070,000. The next is Rule 506C, which is just like a traditional private placement, except you're allowed to generally solicit and advertise. But in exchange for being able to do that, you also have to take steps to verify that the investors are accredited. Mostly done through getting what's called a pro letter, which is basically a letter from the investor's lawyer, accountant, advisor, or broker that says they've done the requisite due diligence and that the person's accredited. Or you can do the due diligence yourself and keep a file on it. So that's 506C, and then the last one is Regulation A. I don't know if you've seen any, but I don't think any deals have been done yet under Regulation A.
Some have been filed, but not.
Some have been
Yeah,
filed.
okay.
And there's one company that filed an S1 that's
There is.
very fun to read.
Yes.
Yes.
I'll have to look at that one. I didn't see that.
They have
I'll
no financial
send it to you.
statements, and they disclaim all liability for statements in it. But,
Yeah, that'll go over.
yeah.
That'll
So
go over
it's
well.
gonna get through the house. Things that are not being done very well.
I'm sure there's others filed nobody's seen because they're probably confidentially filed. So.
So under Reg A, you can raise up to $50 million. And it's more like a traditional IPO. You file with the SEC. The good thing about Reg A is you could test the waters before you even file. So you can go out there and advertise and generally solicit and say, hey, I'm raising money, I'm raising X amount of money. If you're interested, give me your email address and this other information and let me know how much you're thinking about investing. It's non-binding. And so you get a good idea of how much people might want to invest in your offering before you even spend money on lawyers and accountants and other things. So you can raise up to $50 million. You do get a full SEC review, so it takes time to get that done like a traditional public offering. But that's another way you could sell these securities. And the securities they're using...
And Lou, what are the financial statement requirements for Reg A?
you need 2 years audited financials and the requisite interim financials.
Tier
And
2.
for Reg CF, actually, which I think is really interesting if it's a smaller company, you need 2 years reviewed financial statements and no interim statements. So it's a lot easier to get a review done, especially if you're a very early stage company. So that's really the least cost-effective way to do it. And a lot of people are combining the Reg CF and which you can only raise up to $1,070,000 with a 506C private placement, which the amount is unlimited. So you could do them on a combined basis. The type of security that I've been seeing, there's a couple. I mean, there's the SAFT, which Margaret mentioned, which is a simplified agreement for future tokens, which basically you get to buy into the tokens once they're actually utility tokens at a discount. And so that's one thing. And then there's something called a rate, which is a real agreement for tokens and equity, which is something that Start Engine came out with. And in that case, they're selling equity and simplified agreements for future tokens at the same time, so you actually get an equity interest in the company.
So, and I would say every deal that is out there, if you've got investors in the audience and you're interested in pre-sale, talk to some of us about it. But every deal that's presented to you, it's definitely heavily negotiated, especially if you're in at the early seed rounds for these. However, there are a lot of concepts that are very non-traditional in them. So throwing in the concepts of warrants and convertible notes and other things,
Right.
oftentimes will have a company run away because they do have blockchain-focused funds that are not doing that. So part of the blockchain community, remember, is being disruptive financing. So to the extent you're approaching companies, be aware that a lot of what they want to do is things non-traditionally. And so just being aware of what that means. So going on to this, you now have this pre-sale right, and let's say a utility token is recognized in the United States, which it's not yet. The SEC has 2 safe harbor proposals before them where a security would move into a utility token. The SEC issued a lot of subpoenas, you might have seen in the news, because there are a lot of fraudulent companies out there doing things. And also there are a lot of companies that are not attempting to be compliant, not being fraudulent, but they're not trying to find an exemption. So the focus has been on that for the SEC for the last 6 months. In this early spring, they started to focus now on listening to members of the blockchain community and looking for, can we move a transition from a security to a utility? So, but let's assume we first of all, we can do that. Richard, you want to talk a little bit about trading? So, you know, the whole trading aspect of this. Where do you trade? How do you trade these tokens?
So-
And what do you do with this? There's not a NASDAQ or New York Stock Exchange.
I'm going to back up on it a bit for a
Yeah.
second here, which is the reason the SEC got so interested in this place is because ICOs, as they're called, which I think is probably a bad word, as is a SAFT at this point, so I'm trying to use different terminology as going forward, is they were sold generally starting abroad from some other country. Let's just say Switzerland and Singapore seem to be areas where they're friendly to having these happen, but they were done by nothing more than a white paper. If you haven't heard what a white paper is, I assume you have. But it's basically a thesis of what their idea is, and they're going to issue their tokens off a white paper, and that was all the disclosure they had. And it was put up on a website, it was generally solicited, and at the end of the day, non-accredited investors, any kind of investors were investing, and probably US investors. And then they were taking these things, which everybody claimed was a utility, because they weren't saying it was a security, and they got traded. There's exchanges internationally where you can go online through a digital wallet and buy and sell tokens that are now free trading, and there were US investors participating in it. And so your question about where do they trade, I believe, and I haven't traded them, so I can't tell, but there are platforms abroad where you can get on and see tokens that are bought, buy, sell, trade, ask prices. But in the U.S., the SEC has come full circle clearly now and said for tokens to trade in the U.S., assuming all tokens are basically securities, that they either have to be on a registered exchange or on a under an exemption called Reg ATS, which is an alternative trading system. And it's basically, you have to be a broker-dealer, registered with FINRA, and then you have to operate a platform on which they can trade. Now, there are a couple. There's something called T0 by Overstock that's applied. There's another one, Liquid Markets, and there's a third that you mentioned to me.
Security.
That are all in the application phase, but none of them are actually up and trading or exempt yet. And so, as of now, I don't know that there's anywhere in the U.S. where you can trade them, but I believe there's internationally.
Yeah, so Binance, you can trade on within the U.S. A U.S. person can get on to Binance. Can you get on Bittrex?
I can trade it on my phone.
Yeah, you can trade on the phone. So now, is that legal?
So
is a question.
so back up.
Whether the SEC will go after those exchanges, and they
then
have announced that they will.
Question on Binance, you're trading, but are you trading cryptocurrency or you're trading tokens? I'm kind of,
They don't take fiat. I buy it on Coinbase/GDAX.
right, so, okay, so,
From GDAX to Binance, where I exchange the Bitcoin.
You're buying all tokens.
so now I'll back up. We're talking about altcoin, and so when I'm talking about tokens, not about Bitcoin, Ethereum, altcoins, other kinds of coins that theoretically are currency, some of which might actually be securities, but those are trading on platforms, no question. You can buy 4 different kinds of coins, I think, on Coinbase, and then take them from one app to another, and now you've moved them to another wallet, which is probably trading internationally and trading them for yet some other cryptocurrency. I don't even know what it is, and I know people who do it.
Probably has roughly 100 tokens.
Right.
Yeah. Yeah, so, and they do have what I would consider utility tokens on there, and security. So the SEC did make an announcement about the exchanges that Richard referred to earlier, that it's belief. And some of these exchanges just came back, and Bittrex was one of them, and said, well, that's fine, we only allow utility tokens in. So there is this clash going on between what is a security, what is a utility. What does that mean for now? Okay.
And it's not so clear, because
It's not clear yet.
you can ask what's a security and what's a utility, but likely it has some features of both, probably.
Well, some of them are hybrids, but a lot of the exchanges now are defining utility tokens. They're cracking down more, so getting listed on the exchanges as a company is a lot more difficult. Going through some regulatory framework like the Swiss one, which has defined utility tokens, is a good way to get yourself listed if you're thinking that. We're going to go to Q&A now, so I'm sure there's a lot of questions, and Shelley has raised his hand quickly. The question is, I'm a microcap company, and should I be basically considering this ICO way of financing right now? I would say, if you're going to consider it, you're not going to consider it within your company. You might split off and have a strategic alliance with a company that becomes a blockchain company that may have some sort of service support for your company. There are 2 microcap companies I'm aware of, and one is in water supply, cleaning water supply, and the other one is in solar hybrid energy that have done that. One dropped down a subsidiary, the other one set up a separate company and has a strategic alliance. Is anyone else aware of other microcaps looking at it?
I had a thought on that.
So do
I think it's a great way to raise capital if you can do it, right? So if you're a company and you have the choice of selling additional equity and getting diluted, or selling tokens, may as well sell tokens. You're not going to get diluted. So that's one of the big reasons why you might want to consider doing it. But I think it also should make sense. Like if you're an agriculture company and you have nothing to do with the blockchain, like what are you going to do? Tokenize corn? I mean, it doesn't make sense, right? So if it makes sense, especially if you're a technology company that's doing work in the blockchain space, then I think that's one of the reasons you're going to want to do it.
Can I just add to that?
Sure.
I think, and it's a great question, because we're at a microcap conference, and I think trading in ICOs is a lot like the old pink sheets sort of right now. It's how and that's why people hear all kinds of, because it's opaque. You can't quite see it. And so companies that have a use, yes, technology base, that have a user base platform. I'm talking Reg A language now for a second. If you think you can get to a user base that's going to take your token, forget crypto, and use that on a platform for a use of some kind, then it might be a good idea for you to do it. Whether you can do it under Reg A or 506C and other issues about trading, it's still early to be figuring that out. But you can, probably all of us here could tell you how to issue the token in a compliant way and get it in people's hands. Where it goes from there, I'm not sure. That's a separate question still we're
And I
working
have
through.
something to add on both of what Richard and Lou have said. I interviewed someone from MIT regarding the future of cryptocurrencies, coins, tokens, and this gentleman is of the belief that A, coins will replace currency ultimately, maybe in 15 to 30 years. But the interesting part, to answer Shelley's question, is the gentleman believes that we'll have different coins for different things. For example, we'll have education coins to pay for tuition, we'll have grocery coins to pay for groceries. So that would make a lot of sense for a microcap company to be able to utilize, to have an ICO to sell those coins, and then people could utilize them as part of paying for things.
Coins come in many different flavors, as you can hear it, and so that's an important part to it. The latest thing I've heard is tokenized asset offerings. It's yet another term, which is a token just backed by assets. I mean,
Yes, and there is a company here that'll be presenting today, Millennium Blockchain, and they invest in blockchain companies. So that I would suggest if some people have further interest, that's a good company to go look at. We've talked a lot about barter transactions, but for microcap companies, also just think about the different ways a blockchain can help you. Data, storing data, supply chain. If you're a supply chain company in any way, that's not a barter transaction, but tracking authenticity along the supply chain is a really important part of the technology. I say in the healthcare area, we're going to see a lot of things with carrying your personal identity on, here, carrying your medical records. There's a lot of HIPAA issues that are going to be in that area. But the other thing a microcap company for trends to look for is M&A is going to be a big trend, and so you might be looking to acquire a blockchain company or have alliances or license things from a blockchain company. I recommend to every single company I work with that is non-blockchain, they should have an internal working group. They should have one person whose job within that company is to understand blockchain. Imagine it's 1996, and I was doing IPOs like crazy in 1996 and lived through the bubble like some of my colleagues here. But it's that time frame, and you're that company that didn't look at Web 2.0 right then. Okay, you didn't look at doing things in the cloud. You thought the cloud, I will never put my information up there. SaaS products, you weren't thinking about that. This is a similar sort of technology. So get your companies to look at them. Your funds, you will start seeing that you are investing in companies that have something related to blockchain technology. They may not have done an offering. Bitcoin never did an ICO. Bitcoin just exists. It was just distributed. So a lot of companies are using blockchain technology, and if you're going to be investing in those companies, you have to understand it, you have to understand how it works, and also the opportunities. The question is,
Yes.
are the tokens running off of ERC-20? That is a blockchain that's run off of something called the Ethereum platform.
Which originally, I don't mean to cut you off, but I just want to get the question out.
Yeah.
Which was an
So we can make sure that everyone hears
Accurate.
the question. Ethereum is a blockchain, and a lot of these tokens are being written, let's just say, off that blockchain. So
protocol.
based on that blockchain. And Ethereum, unlike Bitcoin, had an ICO. So they distributed the first part of it through doing an offering. And they did not do it as a registered offering, maybe not compliant. So the question is, what's going to happen to all of these coins that are now written off this blockchain or Ethereum itself? So let's assume it is a security. What typically happens if you've issued a security that's not registered? What are the rights that those holders have? Lou, come on, you know the answer to this.
They're going to end up having rescission rights, so.
Can you speak in the mic? Sorry.
What potentially could happen, it's kind of interesting because the issuer is issuing a token that kind of rides on the Ethereum platform, right? And so the interplay between, the proper issuance of that token and then the invalidation of the platform token, I don't know. I haven't thought that one through yet, but that's really interesting. But I guess the worst case scenario could be that the issuer would then have to do a rescission offering, which is actually another offering that has to be registered or exempt, and in most cases would have to be registered because if you already have lots of shareholders. So, that costs money. You have to pay everybody back the money, which you probably spent. So it's a
And that also assumes
Right.
that they would rescind their rights and they didn't make money off of this and if you look at the ICO.
Presumes they have the money to rescind.
in the
Yes.
words of one of my clients, it's a dumpster fire.
Yeah, yeah.
All right, there's a question from the gentleman in the front. One more. So the question is, there are companies like Kodak that are coming into this space and starting to offer coins, and you also hear Long Island Iced Tea rename themselves Long Island Blockchain Iced Tea, kind of trying to get along with the trend, but are we going to see more of those companies come in to it? And I will say that Kodak is not a public company, but I represent one company, the Atari Token Network. And Atari, the French public company, invested in a blockchain company and licensed its name to it. So that's an example of using branding to try to get ahead of the 30 or 40 gaming blockchain ICOs that are out there.
So two completely different things. One is, again, MicroCap. For the companies changing their name and anyone coming in asking, I'll say, don't do it. You just, you tried to do something that other people did. You can expect a subpoena coming soon if you're going to do it. For Kodak, it's interesting because they're proposing a model it's a royalty-based model. Not only are you getting a coin and sharing your pictures, but to the extent there's a valuable asset worth of a whole bunch of pictures and people start licensing or using them, you're going to share in the profits of it. And that's what a token, because it verifies and has security, will know who owns it, who's entitled to participate in it. Where it gets a whole lot more complicated is what happens with that token when someone trades it and it ends up in someone else's hand and all the other things about it. But as a model, tokens allow you to do things like that. You're basically syndicating something out like you did in the old days, but a lot easier and better. And just one other thing totally aside, which is this is the market. It took Facebook, I read this, 7 years to raise $1 billion. It took Uber 5 years. There's a company called Telegram that if they complete their next offering in the next 2 months, if they do, they'll have raised $1.7 billion in 4 months. That tells you how big a change the world has just occurred. So
Yeah. I had a client that raised $20 million in 2 minutes with an ICO. So
it's a paradigm shift.
yeah, but that is not everyone, okay? And there's a lot of really invalid companies out there. I know we need to wrap up, so all of these folks are going to be available. Lynne has interviewed this person at MIT, and it's got some. I wish we could have more of that information, because it really will tell you what a younger person is thinking about who's in technology and where they're seeing the future. Remember that our millennials are now 40 years old. That's the age of the millennial, and they have the largest amount of free cash to spend right now, and they like technology, and that's what's leading this boom, as well as the new generation. What are they called? Z? Generation Z. That's my kids as well. So they like decentralization. They grew up in 2008 when the banks were falling apart and their parents were losing their houses and their jobs. This is what's driving this community. So just being aware of that and getting involved in it. So please, we got lots of people who can help bring you into it and ask us questions. Thank you.
Thank you.